More center, like yeah. Let's move the chairs a bit. You should no, stay here. You should sit here, and we should move the chairs a bit more. Yeah.
So it's, I just want to make sure I get it right. It's Swapnil Agarwal?
Yes.
Agarwal?
We are waiting people to come now open the door.
Okay. Okay. Next. I'm gonna break everything.
Don't hurt yourself. Hospital visits very expensive here.
Yeah. Have you been?
No.
So have you?
I'm just taking a guess.
Assuming. Based on everything else.
Exactly.
Hello.
Just asked you to hold the mic in the center.
Hello.
Testing 1, 2.
Testing.
Stay away from this area.
This area? Okay.
Let us know. We're good?
What?
We good to go? Or should we wait now?
I think we just wait, yeah.
We ready? We're live. Come on.
All right. Welcome to Davos Lodge WEF 2026, something like that. And I'm Rhett Power. I am from Forbes, and I have got a good friend here, Swapnil Agarwal, today, who his fame is really as founder and CEO of Integra Capital, and he works in global real estate investment and operating an operating platform focused on value add and affordable housing across the United States and India. But you have a new product now, and I'm fascinated by it because it's going to democratize the way we think of real estate and affordable housing and regular people's ability to get involved in real estate and create wealth. Talk about Integra a little bit, and let's also frame the problem that this is trying to solve.
Well, first of all, thank you. It's a pleasure and an honor being here, and thank you, Rhett. So, to give you a little bit of context, behind, why a concept such as Integra came about is it comes from both personal and professional experience. Mm-hmm. So as a young teenager, I immigrated to the US, Houston, Texas. And for the first 8 years of my life, I grew up in these communities. I grew up in workforce housing. And again, the great American capitalism led a renter to become an operator. And that's the beauty of America. And then I started Nitya Capital, which is, a real estate investor and operator focused on workforce housing and affordable housing. So over the last 14 years, we've lived through multiple cycles of owning and operating these affordable housing. And I came to a conclusion that, the bottleneck isn't assets or isn't demand. We can keep buying more assets, but the problem remains the rigidity of capital that goes and invests in these assets. Now, world has changed so fast, right? Like 10 years ago, if someone was to ask you, what's the safe investment? You would say U.S. Treasury, U.S. core office assets, right? And growth equities.
Correct.
And today, none of those three things are safe investments anymore, right? So there's a natural gravitation of capital looking for investing in assets that people use daily. And it, naturally is housing, logistics, infrastructure.
Something you actually understand, like most people.
Yes. And there's
sort of
stability,
understand it.
there's cash flows you can underwrite. Like the capital isn't chasing the next growth story anymore. They're chasing preservation of capital with what we're seeing everything around the world. And affordable housing, which is like such a hot topic, obviously, in this year's WEF, is something that, if you think about, the world hasn't solved so far. It just keeps getting worse. And when I think about it, to solve this world affordable housing problem, what do the world governments keep doing? They keep subsidizing more. But that's not sustainable. More subsidies isn't the answer, right? But you see Europe, that's all government housing, right? And when there's government housing, there's bureaucracies, inefficiencies, right? It's not an asset class that traditional private equity would say, hey, I want to invest in it. And that's what creates the capital rigidity, because people who end up buying and owning and operating these workforce housing products, they have very illiquid capital that they use. And then if you go through a downturn, like which real estate has gone through over the last 3 years, because interest rates been all-time high, and they're then forced into exits and distress and foreclosure, and ultimately who gets hurt? Those tenants. If there's no predictability, stability of ownership of these assets, and the owners consistently being pressured to raise rents and make economics work and make capital structure work, it just gets passed down to the tenants. And so ultimately, what we're trying to solve for through Integra is that capital inefficiencies, to bring that cost of capital down, because ultimately, if you're able to do that and solve for that, you can, there won't be any forced exits. Owners doesn't have to sell assets to create liquidity for their investors. And so that's the hope and the goal through Integra.
Well, that's amazing. Let me ask you this, and this is a tough question. Is this a technology solution kind of searching for a problem? I just wonder, with how many tokenization efforts have failed, I wonder if are you concerned about that at all?
Yeah, I think, in my opinion, that traditional, or the people who are trying to solve for tokenization, they're solving it from the lens of technology. Okay. Right? They're not solving it from the lens of actual real estate. Because let's face it, right? Real estate is a very, identity-driven, jurisdiction-sensitive, and a very legally complex asset class. So pretty much everyone who's trying to solve for tokenization in real estate, they're just taking the generic blockchains and retrofitting for real estate. Mm-hmm. But that doesn't work, because real estate is, like I said, so specific. So what we've done through Integra is built from scratch an entire infrastructure, which is layer one, that just works how real estate works. So most of the intricacies of buying a real estate are embedded so that the future tradability of these assets becomes instantaneous.
That makes a lot of sense. For you, what part of your track record is sort of least transferable to building Integra? And how are you compensating for that gap?
I would say the tech coding part. Okay. Because, again, my background is finance, business, and entrepreneur. But, in today's world, you don't have to solve everything yourself. So I have a, great team that, I'm very close with, and they're the most intelligent tech people, and they have, designed this beautifully. And again, when it comes to building something like this, because you're essentially trying to build something for decades, right? That lasts for decades. It changes the way real estate transactions happen. And so,
You were talking about that. I'm sorry to interrupt you because I want to dig into that. So I was
okay.
just reminding me.
So the key to an ultimate success of this initiative is going to be discipline, because it's again, crypto is still a new technology. There's a lot of speculators, so we're not trying to make real estate speculative. We're just trying to improve the capital flow that goes into real estate. So again, building this with discipline, right governance, right regulations, making sure you keep jurisdictions, because specific jurisdictions, each geographic region, make sure you stay within the lines. If we can do all of that, I think it will be the future of real estate.
So walk me through the customer experience here. Is this project driven? Is it how does it work? If I had $50,000 to say, I'm curious about how this would work.
Sure.
How would I?
Yeah. So basically, think of this as a marketplace.
Okay.
So think of this as a New York Stock Exchange, but it's tokenized, so it's online.
Okay.
And so you go on this, platform, and you have projects from all over the world on there. So, initially we're saying we're going to start with income-producing affordable housing, and then expand slowly. But ultimately, what you'll see is a marketplace where there's different developers, different real estate operators. They have various projects. And then it's a whole ecosystem. So we're not trying to say we're going to eliminate, the brokers or the title companies, but they become part of the system, right? All on there. And then you will have the flexibility to invest the projects of your choice, the operators of your choice. So it's going to get, even I can envision what it will look like even 5 years from now. I just, the concept is that, like, you go on your Ameritrade account, you trade stocks, it's going to be like that for real estate.
We were talking a little bit before we came on, and you brought up the example of now it takes 90 days to close a deal, typically, if not longer. Is that going to solve that problem too, of being able to apply my investment?
Absolutely. So one of the key features of Integra is that each asset will come embedded with something called asset passport. So all your traditional, when you want to make an investment into real estate, all the things that you want to see, title reports, third-party appraisals, property condition report, environmental phase 2, all of that will be stored in this passport.
Oh, nice.
And so it becomes like an identity of that asset, so that if you want to buy something, it becomes instantaneous, versus, like you said, 90 days, you get through all these things. And
right.
So all we're trying to do through Integra is tokenize the economic rights and the governance of that token holder. Okay. The real estate, the SPV, the legalities, that doesn't change. It's still the same.
Well, it might change over the next.
Yes.
Yes. There's pressure probably being put on. Right. I'm going to shift gears a little bit. Affordable housing is a politically sensitive topic, right? And how do you prevent liquidity tools from being framed as sort of financialization of housing? If that makes any sense.
Sorry, can you repeat?
So, how do you prevent liquidity tools from being framed as sort of affordable housing being politicized, or,
yes.
In
fact, this is doing the opposite, because from where I sit, I think governments all around the world is trying to solve this issue for their countries. Yeah. How do we create more affordable housing? How do we keep up with the demand? Now, if this thing is able to create monetizations and create liquidity, I think
people are going to build more. They're going
So I think the governments will be the most happy, because we're not just relying on more subsidies. Mm-hmm. This is capitalism at its core, where you let the private markets work it out versus government coming and stepping in. So for them,
and that's housing experiments with the government.
Yeah, so government should be all over this. They should actually look to help us in this, because that will ultimately free them to provide subsidies. And
what kind of support would that? What does that look like? What would support from a government come?
I mean, it's just at this stage, really, it all comes down to establishing credibility behind this platform. Because look, we have the best tech, we could have the best projects on it, but if there's no, you can say big name, or if there's no stamp of approval, it just won't gain that attraction, right? So we just have to get people behind it, the governments, the big names.
So, from a regulatory standpoint, what agency, let's say in the U.S., what agency would oversee this? Does that exist now?
I think it's all within the framework. There's regulation that exists today. So, like in today's sense, let's say I have a project A, I create a SPV, then I have a private placement memorandum, investor signs, you get K1. So none of that changes.
Okay.
So it's still being governed by, you're making a private offering to a public.
Okay.
Right? So you've whatever rules apply on that, it still applies to that.
Okay.
All you're doing is now digitalizing it. So those frameworks exist. So there's many, rules are changing constantly, but the basics of doing this already exists, where you're able to kind of take your PPM or your operating agreement and then basically instead of paper shares, it's going to be a tokenized format.
Right. Do you see government creating a body in the U.S. You sort of equated it to a stock market? Would that be regulated by the FTC? Who would regulate that?
It's an interesting question, which, to be honest, I haven't thought about it too meaningfully, because I want to make sure it gets to that stage where government is taking it seriously. And I think because of how many things it's solving for, there will be plenty of incentives for them to help it.
Where do you think this thesis breaks first? Is it the tenant level, the operator level, or the capital markets level?
I think it's predominantly capital markets level.
Okay.
Because, like I said, at operating level, the demand it's infinite. Right. There's more people that needs affordable housing than ever in the history. So you have a stable demand. You have, there's no more supply coming because you can't build an affordable housing unless you take subsidy from the government. So most of the times when, capital markets go in a flux, like the last 3 years, where, your cost of borrowing is just so much higher that the ownership is just forced to sell or liquidate or refinance, that's where it breaks down. It just needs a long duration hold. Like you need that long duration of equity, long duration of debt, which in US you get through HUD and the Fannie Mae's and the Freddie Macs, but that's solely on the debt side. There's nothing on the equity side for this.
That's true, actually. Do you see something being created for that?
Nothing. That's what Integra will hopefully
That's
ultimately
the gap
solve.
Ultimately trying to fill. What do you think happens if better liquidity actually increases rent pressure rather than reduces it? You think that's possible?
No, because the rent pressures, the owners are forced or pressurized to increase rents when the equity is looking to make profit in a short period of time. And most of the structures, like today's private equity structures, they have a defined fund life, 5 years, 7 years. So that inherently will create, because when an investor or private equity firm makes an investment, they're underwriting to a certain return threshold. And to make those return threshold, it's going to need an income, revenue increase or cost cuts. And that's how they're able to engineer, you can say, the IRRs.
Right.
But if you have, an investor who's just looking for 6%, 7% yield, that's what creates long-term ownership. So if you're able to have no pressure from your equity, like, hey, I need to create an exit, then you're able to maximize your renewals. You're able to maximize your tenant satisfaction. That in long term automatically gives you a good financial return. It's just not short-term cosmetic upgrade driven. Like, oh, I'm going to give you a new floor, but I'll raise your rents $200.
Right.
It's not that driven. It's long duration, customer satisfaction. You give them amenities, you give them stable. Most of the renters in the affordable housing space, they're not looking for, a luxury space. They're looking for a space that, and I'm speaking as first-hand tenant who grew up in these communities, they're looking for stable ownership. They're looking for, work orders being maintained and serviced within, a reasonable amount of time. And we're looking for, a nice, clean, safe place to live. Yeah. That's really what people are looking for. But the form of equity that exists today, it just can't sustain or produce those returns by those simple metrics where you just provide a clean, safe place to live.
Right. No, that's right. I think that's a lot of these communities are feeling that, right? So what do you think tokenization, how can that, when you have to manage that, what doesn't exist in traditional structures? What problem does tokenization create for you? Does that make sense?
I think tokenization looks to solve a lot of traditional problems, but obviously because of the blockchain technology, the regulations, you just have to spend the extra time making sure that you're staying within the lines. But I would say as of now, it's solving for a lot of problems. Hasn't created any so far, and I hope it doesn't.
Fair enough. Let's talk about governance control and who ultimately has the power to say no to Integra right now? Is there you worried about that at all?
No, look, I think Integra is going to be very identity driven. So we're going to be the ones that making sure your KYCs or whoever the investor comes in, goes through those channels to make sure that ownership can be had of that particular individual or entity. We're trying to avoid people like the speculators, because that's not what this is. This is long-term liquidity solution. And as we move along, I might not have all the answers today, but obviously, like you asked your last question, as we make progress with implementing and onboarding more assets on this, we will probably find more problems and that we will encounter. Mm-hmm. So next year I will have more to add to that.
More answers, right?
Yes.
What is the profile of this investor? Like, I know you talked about long term.
Yes. So the rules that exist today, Rhett, limits your ownership through tokenization to accredited investors. Right. And accredited investors mean, a certain net worth or annual income.
Right. Understand the risk.
Yes.
Right.
So those are the initial, investors that this is going to obviously attract. But ultimate goal and hope is that, to truly democratize real estate ownership, even a person, once it qualifies to the right credentials, should be able to invest as low as $100 towards this, right? It's truly, it should have no bearings on the allocation or the amount.
Okay. What keeps you up at night right now about this?
Nothing really keeps me up at night, but, there's obviously what I'm trying to create is a convergence of two, I would say, complicated subjects: affordable housing and blockchain. Mm-hmm. The concept that I've laid out works amazing, but there's still a lot of gaps. There's still a lot of, as we move along in this process, obviously every challenge will have a solution, but, I'm excited. And that's what I think about, during my day and nights, I don't worry about what challenges they might be, because obviously if the intent is good and the concept is good, we'll find the solutions. But, the convergence of technology in an asset class that is so operationally intensive, right? Making sure that the operations, the asset class does justification to this new technology. And in my opinion, affordable housing and rental income properties are the best test case because there's no speculation. You can underwrite the cash flows that's going to generate for you. You have predictability. You have demand that's durable. And hence, I believe that this is a great combination of bringing something, there's like a blockchain technology, which is, people may say speculative or something new, combine it with something like a very traditional asset class, which again solves a social utility as well.
Where do you start? What's the start plan? How do you roll this out?
It's already being rolled out.
Okay.
And, the advantage we have, Rhett, is because, we ourselves own about $3 billion in real estate assets. Mm-hmm. So I have 51 communities, about 15,000 apartment units across, the Sunbelt states in Texas, or in the US. So we're starting to implement our own projects first. So that's the key advantage we have because most of the tokens or those initiatives are being created by tech companies.
Right.
And then they're looking for assets to put under. We have an advantage because we have our assets. So we're already in the process. Again, we want to take it slow and be disciplined versus rolling it out really fast. But, look, we have all the tools. We have all the key ingredients to get this operational. And again, my own investors, most of my investors are accredited retail investors today, and that's about 4,000. So we have the demand channels within my own investor base to create the momentum on this platform.
We were talking, and I agree with you. I think this solves a lot of problems for government. In those communities that you're already working in, have you talked to government officials there about this? And do they understand it?
Yes, absolutely. I mean, I haven't spoken to government official about this affordable housing, which I'm hoping to do today. Okay. But, we've obviously, engaged lawyers and, done a very thorough review and making sure the lender's approvals and transferability approvals. So all of those are in place first.
Right.
But as far as it's not needed to talk to any government official, but like I said, the biggest thing that this initiative needs is that credibility from a big source. So at the right time, that will be a conversation.
Okay. Do you mind if we take some questions?
Sure, yeah, would love to.
Do you guys have questions?
So is it only in the US or is it globally?
The idea is to do this globally. Yeah, so the idea is that this will attract assets from all parts of the world and investors from all parts of the world. And that's what truly, will make this special because then you can truly say that anyone can invest in real estate.
Well, and affordable housing is a global.
Yeah, absolutely. And if you can solve for this model then can be replicated, tokenize anything.
Yeah. Is this a good model for investors? I mean, for builders and for...
Absolutely, because this is just going to create liquidity in an asset class which is highly liquid. Your capital source today are, for core assets, you have pension funds, insurance. It's very, very long dated, lot of due diligence. And then you have private equity firms. So today...
How does this help builders?
Currently we're envisioning putting rental properties to start with. But for builders, again, for any real estate operator, this will be a way to raise equity.
Okay.
Right? So you put your project on this platform, and based on your credentials, your past track record, the idea is that as a potential investor who sees, let's say, a builder's project, you'll have all the tools at your disposal to make a decision if I want to invest in this project or not.
Will it have their track record and their
everything?
Scores?
So this will become a marketplace. So it's going to have...
You get rated, I guess.
Exactly. So ultimately, it's going to become a full ecosystem.
Right.
Right? You'll have rating agencies. You have, brokers marketing certain assets. So it's not going to eliminate a lot of these things. It's going to basically help it trade better.
Yeah, that's good. Any-
Thank you for answering the previous question about being global, lady here. But the question is, so as an investor, of course, we will be global. But the projects, where are they going to be?
The projects, again, the idea is to be global. So idea is for any developer, any builder from any part of the world to be able to use this platform, raise equity, put their projects there. And, obviously my projects are in the US. So we're starting with the US projects. But, the geography should be relevant.
The reason I'm asking is, have you got any experience on the African continent? Because talking affordable housing, affordable homes is a huge,
Yes.
huge.
Yes, actually, I don't have personal experience, but I've heard a lot actually recently about African affordable housing. And again, like I said, this problem is prevalent in all parts of the world, right? And of course, Africa is one place that definitely, and again, most of the world government's solution to this is just giving more subsidies. But hopefully, the idea is to attract capital to invest towards this so that governments doesn't need to provide a lot of subsidy.
I live in Lagos, and I know what you're talking about. They just destroyed 19,000, homes, and actually didn't really provide any place for those people to go. And
Makoko,
yeah,
I'm very well aware of Makoko. I got engaged with the chief of Makoko.
yeah.
Shimede.
So I mean, it is a massive problem there.
I'm aware of that.
But any other questions? No? All right. So what do you want to leave us with? Oh, you get. Good.
So where are you in the project? Is it just the vision right now?
No, the whole infrastructure, architecture, it's done. The technology part is done, right? So now what we're doing is in the process of onboarding my projects on it. And then, again, the legalities of the project level, making sure it works in a tokenized format versus, the traditional SPV format, which is the paper shares. So it's all being converted into a tokenized format. And then again, it's all live, right? So this is all over the next 6 months. You'll see, right, real projects, real, trading or real transactions being done on this platform.
What do you? I'm going to do the unfair question that everybody asks at the end of a conversation. We're sitting here 5 years from now. What do you want to see? What's the?
Yeah.
What's the?
I think 5 years from now, if we have solved for liquidity in affordable housing by even 20% versus today, that will be success for me. Because once you solve for this, you can replicate that model to any asset class. This is one of the most complex. You can tokenize anything after that.
To his question and to both your questions, are places like Africa and maybe parts of Asia, would those be easier places to start? I know because you have assets already in the U.S., you're starting there. Is that a larger potential?
It might be an easier place to start. I think if you look at it from legal infrastructure point of view, you might talk to those governments. But from an investor point of view,
Safer.
yeah, you want to start with the most developed countries, the most stable assets, because that's what's going to make them
That's
come.
what's want to make people invest.
Like if I have a project in Lagos
Trust.
to start with, I'm not sure how many investors it will attract.
Right. Fair enough. Fair enough. That makes a lot of sense. You guys have any follow-ups? No? Any other questions? No?
Yes, maybe just what you were saying. which I probably would agree for the investors. They want to have a ready-made and a beautiful package, and something which they might be able to relate to. But I wouldn't entirely agree because, for example, using Nigeria, you have a lot of diaspora, about 17 million.
I see.
And they're very, usually, particularly in the US, in the UK,
I see.
And they're particularly affluent.
very affluent.
No, good to know. Good to know. Yeah, good to know. No, thank you.
Thank you.
Thank you very much.
You have anything else you want to leave with?
No, I mean, it was a pleasure conversating today. And look forward to, again, giving an update on progress every year.
I would love that. This is fascinating to me.
Thank you so much.
What do you think? One question. This is what do you think the average investment's going to be? What do you like? Who's your target when you go after investors?
Ultimately, it should have no bearings on the amount.
Okay.
It could be even $100.
Okay.
Like today, like if you go on Robinhood, people can buy like half a share of Tesla or whatever.
Okay.
Right? That's the goal. Like obviously it will take time to get there because today's regulation doesn't exist. So initially we'll be targeting, accredited investors who are looking for yield, safety, defensive, positioning in their portfolio and exposure to an asset class that really you can't get exposure today. And anywhere in the world. So hopefully, the projects will be, diverse. It will be good projects from very good operators. And amount should really be relevant because, a project could be a $100 million project and you're tokenizing, let's say, 30 million of equity. It really, the idea is to have a transparent way where people can allocate capital towards real estate.
All right. Well, thank you.
Thank you very much.
All right. Appreciate it.
Thank you.
We got to get a picture.
Yes.